Hello friends, welcome to our YouTube channel. We are going to discuss the economic survey, but before discussing the economic survey in detail, we are going to discuss important concepts and important things that were mentioned in the economic survey. Today we are going to discuss the factoring in India. What does a factoring mean? Before knowing what is factoring, you have to know what is a bill of exchange. What is a bill of exchange? Suppose there is a person A. He is a customer to a B, which is a business unit. So B will sell goods. What will do? B will sell goods to A. A, in spite of giving money, he will give a bill. Suppose a goods worth of 10,000 has been bought by A. He will give a bill for 2 months or 3 months, whatever may be the time period, and after that period A will say that I will return the amount if you return this bill. B will accept because he wants business to happen on a credit basis or whatever it may be. Suppose if there is a urgent need for B, he will go to a bank. Here comes the concept of discounting of bills. B goes to bank and he will give the bank this bill and asks for and requests for money. What will the bank do? The bank says, I will not be giving the entire 10,000 for you. I will take 1,000 from this bill and I will be giving you 9,000. So this 1,000 is a commission for bank. This is bill of exchange. So now what is factoring? Factoring also appears similarly, but the difference is in interest rate. See, the MSME, here A is the buyer, the MSME will sell the receivables to B. It may be a bank, it may be a NBFC, it may be a company. So MSME will sell this bills of receivables to B. The person who is receiving or buying such receivables is called a factor. What does this factor do is that the factor will give the 10,000 back to MSME. Complete 10,000 he will be giving. He will not be deducting any commission like the bank, which we saw in bills of the exchange, discounting of bills. He will be giving the entire money, but in return he will be charging interest from the MSME. So this is the difference between in bills of exchange and discounting of bills. Bank will be getting commission, but here the factor will be getting interest. And also in bills of exchange, if the person receiving the bills of the person who has to pay the bills after the time period doesn't pay or rejects to pay, then the responsibility will go back to the business only, the business person, the person who is selling. Here there will be no such responsibility. Okay. So factoring is an important source of liquidity worldwide, especially for MSME. Factoring is a transaction where an entity sells receivables due from a customer to a third party called a factor. It may be like bank or NBFC for immediate funds. See, he may sell all or part, the MSME may sell all or part of invoice that can be sold to a factor for getting money immediately at computed interest rate. So here interest is important. The factor then collects a payment from the buyer of the goods and earns a commission in the form of interest. So he will be getting the interest. Who? The B person, the person who is buying receivables from a MSME. This is different from bills of bill discounting. In bill discounting, a bank or NBFC gives a certain percentage of outstanding value. As I know, in 10,000, a certain percentage will be given. Certain percentage of outstanding value of invoices to the seller. So the bank will be deducting some commission and will be returning the rest. And in most cases, a seller has to take the responsibility. So seller will be responsible in bills of exchange, but not in factoring of the invoice by the buyer to a factor. However, in case of factoring, the factor himself takes the responsibility. After the 2 months or 3 months period, if that a person is not honoring or is not returning the money, then you cannot claim from the MSME. This is the difference. But also there is other things. See, there are two types of factoring. One is with recourse. With recourse means where the seller has to pay back the advance obtained from the factor if the buyer fails to pay. So here the MSME will take the responsibility. Without recourse means the MSME will not be responsible. Only factor will be responsible. To resolve the liquidity issues in MSME and lay down the basic legal framework for factoring in India, Factoring Regulation Act, the Factoring Regulation Act 2011 was enacted. So according to this Factoring Act, 4 types of entities were allowed to engage in factoring business. What are the 4 entities? Is banks, statutory corporations, NBFCs and companies. The entities like companies and NBFCs which are involving in factoring business, they have to get license, a kind of registration from RBI, whereas banks and statutory corporations doesn't need. Next, that too, the RBI grants registration only to those NBFCs which do factoring as a principal business. So what is principal business means? The main occupation should be of the NBFC should be factoring. See, the principal business means whose financial assets in the factoring business constitute at least 50% of its total assets, and income derived from factoring business is not less than 50% of its gross income. Suppose if the NBFC is getting 40% of its income from factoring business, they will not be allowed. It will have to get at least 50% of the income from factoring business. Then only RBI will give registration to it. Okay. So because of this is very difficult provision really to say. So under these provisions, only 7 NBFCs called NBFC factors were involved in factoring business. Only 7 NBFCs. This is very small, right? So meanwhile RBI constituted an expert committee under presidency of Sri K. Sinha to suggest long-term measures for the economic and financial stability of the MSME sector. Relating this UK Sinha committee is related to MSME sector. Among various suggestions related to MSME sector as a whole, the committee recommended that NBFCs other than whose principal business is factoring should also be permitted to carry out the factoring business. So based on the recommendations of UK Sinha committee, government allowed based on the recommendations of Sinha committee, Factoring Regulation Amendment Act 2021 was passed, and it has allowed the NBFCs which are not involved in factoring business. The principal business concept as a whole was scrapped. So the removal of principal business criteria. Business criteria was removed. Now this significantly increased the number of NBFCs to take part in factoring business. So this is it for today.